We're going to cover 10 accounting interview questions that you may hear in an interview, and the best way to answer each question. But I don't want you to just hear these answers from me. I've pulled in 10 of the top finance and accounting creators across the globe to share each answer with you so that you can get the job of your dreams. So let's jump into our first question. What are the 3 financial statements and how are they connected? And I'll start off with answering that myself. And if we haven't met before, hey, I'm Josh, your CFO guy, and I help people like you grow in your career with fun and easy to understand content around finance and accounting. The 3 financial statements are the profit and loss, the balance sheet, and the statement of cash flows. The profit and loss connects to the balance sheet via an account called retained earnings. And the cash flows pulls both from the P&L and the balance sheet. It pulls net income, depreciation expense, and amortization expense from the profit and loss. And it pulls the net change in all balance sheet accounts other than retained earnings, accumulated depreciation, and accumulated amortization. Since assets equals liabilities plus owner's equity, the net change in assets also equals the net change in liabilities and owner's equity. I'll link to a full video on this. But first, let's move on to question 2. What's the difference between cash versus accrual accounting? And for this, I'll ask Bill Hanna, the financial controller and owner of the Controller Academy.
Okay, cash accounting means for the most part that you classify money in as income and money out as expenses. Accrual accounting means you classify income only when it's earned and expenses only when they are incurred.
Question number 3. What is deferred revenue? We're going to ask Brian Feroldi, who teaches investors how to analyze businesses and is the owner of Long-Term Mindset.
Deferred revenue represents the dollar amount of goods or services that you have yet to deliver to your customers, but those customers have already paid you or owe you a payment unconditionally. Now, deferred revenue is listed as a liability on the balance sheet since it's something you owe to another. Now, as you earn revenue by delivering the good or the services to the customer, the deferred balance goes down and your revenue will go up. Now, personally, I love it when I see deferred revenue on a balance sheet because that means the company gets paid before it has to do anything for the customer, which does wonderful things for the company's cash flow and cash conversion cycle.
Question number 4. How do journal entries work? Let's ask Nathan Lau, who helps accounting and finance professionals pass the CMA exam and is the owner of the CMA Exam Academy.
The journal entries help communicate which accounts on your general ledger are increasing or decreasing. They are denoted via debits and credits and must always match one another. Assets go up with a debit and down with a credit, while liabilities and owner's equity go up with a credit and down with a debit. Your profit and loss flows into an account on your owner's equity section of your balance sheet called retained earnings. So anything that makes your owner's equity go up will also go up with a credit and down with a debit, things like revenue and other income. Anything that makes your owner's equity go down will behave in the opposite manner. They will go up with a debit and down with a credit. Things like cost of goods sold, operating expenses, and other expenses.
Question number 5. What's a bank reconciliation and why is it important? Let's ask Ben Murray, the SaaS CFO and owner of the SaaS Academy, about this one.
Bank reconciliations allow you to compare and match the balance in your bank accounts to the amounts reported in your general ledger. These are crucial, as with cash balances, there can be no room for interpretation. There can be acceptable differences like timing differences or checks that haven't been cashed yet, and there can also be unacceptable differences like duplicate or missing transactions in your accounting software. Fix your unacceptable differences and keep a close eye on your acceptable differences.
Question number 6. What is an accrued expense? And for this, I'll ask Nicholas Boucher, the leading expert in finance and AI and the owner of AI Finance Club.
An accrued expense is an expense incurred but not yet paid. It can also represent an expense incurred in which a bill has not been received, resulting in an estimate. It's common to record an accrued expense when you know that the business has consumed something, but a bill hasn't been received. Debit the expense and credit accrued expenses. And when the bill comes in next month, reverse the entry and replace it with accounts payable.
Question number 7. What are work papers and how should you organize them? Let's ask Anders Lu Lindberg this one. He's the leading advisor to senior finance and FP&A leaders on how to succeed with business partnering, and is the partner and chief commercial officer at the Business Partnering Institute.
Workpapers showcase the supporting calculations for entries recorded in your general ledger, typically relating to reconciling your balance sheet. They are oftentimes prepared in Excel. Common items are prepaid expenses, accrued expenses, depreciation, and deferred revenue. It's important for these calculations to be not only accurate, but also easy for someone else to read and understand.
Question number 8. What are the chart of accounts and how should they look? For this one, I'll ask Christian Watig, who teaches FP&A skills to finance teams and is the director of the Wharton School's FP&A certificate program.
The chart of accounts represents the line items that show up on your P&L and balance sheet, or what's often referred to as the general ledger. These allow you to easily communicate what is happening in your business to the readers of the financial statements. The key is to use accounts that are descriptive but not redundant. Group relevant accounts into sections and use numbering to assist in the ordering of your chart of accounts.
Question number 9. What is a Contra account and how does it work? For this one, we'll ask Peter Sledgers, who is the founder of the investment newsletter Compounding Quality, with over 250,000 newsletter subscribers.
A Contra account is an account in a section that behaves in the opposite manner of the accounts in that section. Because of that, it will show up as negative. Examples can be a discount or refunds, which are both Contra revenue accounts, or accumulated depreciation and amortization, which are both Contra assets.
Question number 10. How do you build a statement of cash flows? For this, we're going to ask Jason Hirschman, founder of Point FP&A, who provides fractional CFO services to startups.
You can create a statement of cash flows via the direct method or the indirect method. The direct method is easy to understand, but difficult to actualize. For that reason, most companies opt for the indirect method. To create a statement of cash flows under the indirect method, start with pulling in your net income from your P&L and add back your depreciation and amortization expense, since those are non-cash items. Then, take each of your current assets and subtract out last period's value from this period's value. Do the same for your current liabilities, only this time, take this period's value and subtract out last period's value. Now you have your cash from operating activities. To get your cash from investing activities, take the difference in your fixed and long-term assets by pulling last period's value minus this period's value. To get your cash from financing activities, take the net change in all of your long-term liabilities and owner's equity balances, except for net income or retained earnings, by taking this period's balance minus last period's balance. Sum them all up, and you have your statement of cash flows.
And there you have it, 10 accounting interview questions with the answers so that you can nail your interview. Here's a cheat sheet with all of these questions and answers available for you to download for free. I'll link to that in the bottom below. But in the meanwhile, which question was your favorite? Let me know in the comments, and I'll catch you in the next video.